Risk management. Many beginners think Forex traders make 50%, 100%, or even 500% every month. But in reality, professional traders aim for much smaller but consistent returns. Here is what the realistic returns usually look like. Professional traders. Professional traders, that is the hedge fund traders and institution traders, they focus on capital preservation first and profit second. Their typical yearly returns are like 10% to 30% per year. For instance, when you have a $10,000 account, your 20% annual return, that's profit for a year, is equal to $2,000. That's 20% of $10,000. This may sound small, but with larger capitals, it becomes huge returns. For example, you have a $1 million account and then you make 20% yearly. Your profit will be $200,000. That's why professionals focus on consistency, not huge gains. Skilled retail traders. The second people we are looking at are the skilled retail traders. Skilled retail traders who are very disciplined and experienced usually target 3% to 10% per month. For example, a $1,000 account, 5% monthly returns is equal to $50. A 10% monthly return is equal to $100. This may look small, but compounding makes it powerful. Example with 10% monthly growth. For the first month, you are starting with $1,000. In 6 months' time, you are having $1,770. Then in the 12th month, you are having $3,138. You are compounding your profit. Consistency beats quick profit. Beginners. What beginners try to do is make 50% to 200% per month, which is an impossible task, a dream. To do this, they use huge lot sizes, high leverage, no stop loss. The result is blown accounts, emotional trading, and inconsistent profits. That is why most traders lose their money. The real secret to Forex profitability. The traders who survive long-term follow 3 simple rules. 1. Risk small, 1% per trade, sometimes 2%. 2. Focus on high probability setups. Trade less. By having a watch list, identify your levels, wait for confirmation, have an execution plan, and then relax. 3. Protecting your capital. A trader's first job is not making money. It is not losing money. Something most Forex gurus won't tell you. If a trader can consistently make 5% per month, they are already very good. 5% per month equals to 80% yearly with compounding, which beats most investment funds in the world. Talking about your 1% risk per trade. Let's do the maths with something practical. Let's say for a 5K prop firm account. Now, many of you will say the 1% of my 5K account is $50, but you are wrong. And many don't realize this. That is why we keep failing. That is why we keep blowing prop accounts. For a 5K prop account, your actual trading capital is your maximum drawdown, which is most of the time $500. That is 10% of the 5K prop firm. So your 1% is actually $5. Now, this might be a very low risk. So to be on the safe side with your 5K prop account, you risk 4% of your drawdown. Now you are having $20 as your risk. And if your risk to reward is 1:3, that is $60 on any profitable trade. And from there, you can scale up your account. And trading like this, you reduce a lot of psychological stress when you are on a long losing streak, thereby eliminating emotional trading. I trust you have learned something from this video. For more educational contents like this, like, subscribe, and turn on your notification bell to get notified when I drop contents like this.